I want to zoom in here and walk you through that little area here. So you can see this candlestick here, the down candle, and then the next candle here. That is the very first presented fair value gap of 9:30 to 10 opening range on Monday. So this, and we took out the sell side at the London lows. When price was in this area here, I felt that it was warranted to make a run for the buy side here. Again, I'm hovering over that candle exit arrow, the sell side, taken here, the buy side liquidity. But let's zoom in here because I want to teach you something in regards to the first presented fair value gap. So this is the structure here. We have original consolidation, buy side, the market's tanking, it went lower. Early on in the session on Sunday, we had SMT divergence that never got canceled out. So it set the stage for the lows that were formed in Asia on Sunday night. Those are the weekly lows, and we can start looking for sell side to be taken and then reject that and start to look for buy side. Not because we're trying to pick a low, not because I think a low is in. It's just they put an extreme gap, which is what I outlined on Sunday before the market even opened up. The market tanked and took out the London lows during the opening range. So here's opening range 930, and then trades down into 945, 946, 947. And then this was the first presented fair value gap. Now, I know some of you think that it's this one. Now, why is this not a valid first presented fair value gap? All right, so here's what some of you think was the very first presented fair value gap. But why is it not a valid first presented fair value gap? Because you need to look at where it is in proximity to the candles that formed just before it. Watch. See the body on this one and the body here. And then this one, the only thing it did was trade down and wick through the discount wick of this candlestick, the consequent encroachment. This whole area here is a balanced price range. So if there's a gap that would be formed inside here, that's not essentially breaking away from anything, is it? Because it's still inside of this balanced price range. So the only portion that would be considered a gap would be what? The bodies or this body to this candlestick. There's no gap there. There's no imbalance here. All this is reflecting is it's leaving this balanced price range with all of this back and forth. And think about it this way. This candle opened up here, traded all the way down to that low and closed there. The next candle opens exactly where the previous candle closed. Then it trades up. And then the next candle, we open here, do a little bit of movement up, and then trade down to that low, and we stop here. We've had range delivered here in the majority of what this would be viewed as a fair value gap with these candlesticks. And this one went lower. So it's not accurate to call this an inefficiency. It's not. It's part of this larger range that's been traded back and forth. And then when we get this candlestick here, this is actually a gap from this low to that low. So look at the real inefficiency here. And there it is there. Now I'm entering right at the consequent encroachment of that there. So there's the difference. I hope you found it insightful. Until I talk to you next time, be safe.